Okay guys, hope you're well. I picked a message up off Dusty regarding a bit of carnage on the DAX. So what I thought I'd do is I'd just break it down and give you my thoughts on the trade yesterday. Now, the first thought that runs into my mind is why you're looking for a big trade on a Friday. So many times I say I don't trade on a Friday afternoon, and there's good reason for it. Unless there's a major news event like non-farm payroll, I genuinely stay out of it. Unless I'm committed to something and I just want to be in and out very quickly. But that idea comes from 9-10 o'clock in the morning. I might set up till sort of 11:30, and then once I'm committed to it, then I have to see it through. But after that, I tend to try not to get into the market if I can help it. Why? Because the markets are erratic. You know, if you think of it this way, whatever money flow is going in through the week, it's going to come out on a Friday for traders that don't want to hold trades across the weekend. They won't be opening up new positions, they'll be closing positions. And that's because they're just human. They want to tidy off their desk on the Friday afternoon and spend time with their families and then do it all again on the Monday. It's just human nature. So bear that in mind when I'm talking through what I think was going on. So first of all, let's have a little look and see what we're getting at. So, you know, I look at the hourlies. So there's your 8 o'clock open. It's the DAX, so it opens at 7 for the pre-markets before London opens at 8 o'clock. Okay, what are we looking at? What can we see? Well, the first thing you'll see with the hour is it's been in a range and it was breaking to the upside. Great. But is that enough to make a decision on? Probably not. Because it is a good way to be faked out of the market. Push the market up to slam it down. In other words, you're enticing everybody in, and then down it comes and it gets you out of your positions. And that's exactly what was happening here. So what they can see is, you can see it's starting to move up. Everybody be jumping on the bandwagon as it jumps over that, thinking, well, hey. They push the market, which entices more people in, and then wallop, down it comes. They can catch all of their stops and keep that train trucking to get out of their trades. That is a basic fake out, you know, simple stuff. All right. But why would it be a sell in the first place? Right. Let's go out to the daily and we'll have a little look. There are 3 elements amongst this that would tell me that it is short. All right. And I'll go through them individually. Now, the first one is this, right? So you've got the first drive. This will set the parameters of the trading arena that you're working within now until this is broken. And I'll show you that. So the fib starts here, and you can see it got up to the top section. All right. So straight away, we can see the reaction points. We know we're always looking for the 50%, which if we draw this in here, just make that blue there so we can recognize it later on. The market will always come to 50% of a major move. Well, I would say that's a major move. You've got the bottom parameter and you've got the top parameter giving you an arena to work within. All right. So we know that. All right. So that's our parameter. It hasn't broken it either way. So the magnet point or the pivot point, whichever way you want to call it, is the 50%. It worked its way down over a period of time and it came to the 50%. It's gone away and it's coming back to it. But look how many times it came to it. Well, it's 1, 2, 3, 4. So that 4 goes at it. And within them 4 goals, it couldn't get any higher. Now also, if you notice when I drew that fib, it lined up pretty much perfectly with key levels. Let me show you. So again, there's the start, there's the end. The 23 is pretty much bang on that monthly. The 38 is pretty much bang on that daily. The 50 is very close. But even the 61.8, for all it's not near one of these levels, it has been tested on a number of occasions. There, there, and there. Alright? So it's funny how these psychological levels come into play. Alright? So let's give us our first pivot point, or an attraction. Now I said there was 3 areas that would make me think this is short. Alright? So the first one is, when the day opened, it would be looking to get to this. So that's 1. It's not enough on its own, but it is a warning sign. Alright? So what's the next one? Well, this is the next major drop. So we're going to draw a fib on that as well. Now this time it started at the top, got down to there and across. Again, it's tightening up the range. And it's no shock. There's the 23.6, pretty much on the 50%. There's your 50 line. So we'll draw a 50 line in. There's your 50 line just there. And look where the price has reacted to it. It is constantly tried to get back to that 50. Okay, so that now gives us something to work with. And what's the third part? Well, it's the week itself. It's the time frame. It has been buying up all week. There you are. So Sunday night, Monday, and then it's been trying to keep up all week. It has failed to break the high of that Monday. So that tells you it's pressure down, and it's all pivoting here around this 50%. All right. So as you're going into the day, or the Friday morning that is, everything tells you this is short. Everything. The buyers this week are going to want to get out of positions. The overall market is running downwards, and we've got 2 key 50% to work to. So let us take this further down. Go down into these. You can see there is your moves. It has failed to get up. All the tails are at the top, pushing down heavily. You can see them. You know, every time it's pushed up, it's failed. Every time it's pushed up, it is failed. So pressure is downwards. And where's it pivoting? This 50%. Constantly. So let's take it into the hour. So we come into the day, you have a bias of short. Why? Because the higher time frames have already told you this. Even if you are to be going long, and you can be market neutral on markets, is it not better to go with the bigger bias, especially on a Friday and especially on a Monday, because you're trying to keep up with the bigger boys? Now, sometimes you're going to get caught, and you definitely are, and there's something on this is going to ignite you to go long, and it's probably this candle here. All right, now that's the 1 o'clock candle. There's your 12, and you could be thinking to yourself, yes, off we go, ready, ready, ready. No, there is nothing there to tell you to change direction from short. Okay, just shut that door. Yeah, she's got a gob like time mouth at times. Anyway, so that is down, and it is pushing up. So why wouldn't you want to take that? Why would you not jump into it? Well, the first thing is there's no sign in the first place for you to get in. All right, the only thing you have is these levels. Yes, you could try and preempt the market and draw a fib from there to there, jump in on your 23, and you'll probably get there. However, let's look at it. If you're going against the grain, first order of the day is you let a candle close. All right, why? Because anything can happen. It could spike 50 points in the last 30 seconds of a candle. It's not unusual. It does happen. And certainly on the DAX. So that's closed. We have no sign of anything that it is going to move any higher. That runs up. But when you let this candle close, look where it closed. It is closed right at the top, next to a level with a 50 just on the other side of it. Now, we know the price reacts at 50. We know price reacts at levels. You have a 50 and a level right next to each other. So there is definitely going to be a reaction point there. So what are we trying to achieve? You want a continuation of the move. But at the moment, you've got nothing to base it on. You've only got a single candle. Yes, it's an engulfer and it is big, right? But it has a taller tail at the top than it does at the bottom. So that's telling you something, but it's a massive body. So it's kind of, who knows? Right, and secondly, you've got these levels. So you would need to see it break the level and break the 50 before you enter. Why? Because it's a reaction point. So what you'd be doing is you'd be waiting for the next candle to close. And trust me, an hour is not a long time when you're trading. But what time is it? That candle closes at 2 o'clock. So why on earth are we looking to get in? Is the next thing. It is held below the 50 and it has come all the way back to the original 50, which is here. So we're now caught and you're thinking, well, what do I do? You know, it's sitting above it. Is it going long? Is it going short? Well, the sensible money from 7 o'clock in the morning was short. Okay, but you wait for it. It's down here. That's 3 o'clock before it closes. And the day's over. So for me, it was kind of a bad setup to start with. The only setup that I could see is at the beginning of the day. And it is on the break of here. You know. And why is that? Well, I just get rid of this fib and I can show you. There we are. That's telling you the pressure's down. That is indecision. That is definitely telling you it's down. But it is proper smashed this 50. And it is closed on the inner side of this. So the sensible trade was a short here, which if you're zoning it, would have been in the middle area of the zone, the green zone, to get to there. Wallop. Simple, safe trade. In with it, let a runner on, and it might have run down onto this 50, making it an even safer trade, and out. That's it. Day done. Bloody hell. Sneezes. And that would have been it. That would have been your day. You know, you could have then decided, right, up here, and then wait for it to come back, and then sell again at this point here. But there's nothing to give you any incentive because it's late Friday afternoon. And this is what trading is all about. It's about being sensible as well as technical. You can break your trades down in such a way that you can almost talk yourself into any trade. Sometimes you have to talk yourself out of a trade. And the way to do that is with having certain rules. You know, I do not trade after 1 o'clock on a Friday. I do not trade before 10 o'clock on a Monday. And it'll filter a lot of the erratic noise out. But for this, based on fibs and market structure, it was going down. You know, you might have had a couple of bites for 5 to 10 pips throughout the day, but you would not have had a mega move to the upside. It was always going to be the downside. I hope that kind of makes sense. I'll try and do more of this and I'll try and make them clearer. But your fibs are very important, and you're looking at the pivotal points, your 50. They are points of attraction, and when the price gets to it, you're looking for the reaction. So if you're looking to go short, you're wanting it to hold below that 50, as in this case here. If you want it to go long, you want it to be on the other side of the 50. So for us to enter into this, certainly at this point, for a continuation to the upside, it had to break that first. It has to go through it. If not, you were trying the quick move, but you still needed the candle to close, and it had passed through the areas that you would want to get in, the 23 point and the 38 point. You know, if it's gone through both of them, let it be. Let it reset. You know, if it had been below that, and then we're going into this candle, fair enough. You know, because that's showing you the way, and then you're looking to get in. All right, but that is just really profit taking of this lot, and then the rest of it was a continuation of profit taking from the week, coupled with the witch, coupled with a couple of other sort of where the market is. In other words, the daily was telling you it was going down. The market has been moving downward. So that's my take on this, and happy days. Anyway, we'll do a bit more. Keep asking me to break them down. I'll break them down for you. When I'm working during the week, if you want the bias, I'll work it out on my bias sheet, and it'll tell you whether it's going to be a good continuation, whether it's slowing and you want to be conservative. And it's pretty good. You know, I've been using it all week, and well, I use it all the time anyway. I normally work it out on a pen and paper. I just put it in the formula I use into the spreadsheet so you can visually see it. And we'll get better. So catch us all soon, guys.